Home prices in San Diego have fallen in 6 out of the past 7 months, and the Fed's been raising interest rates throughout last year. However, we're starting to see interest rates normalize, and will we continue to see downward pressure on prices? Watch this short video to find out. I'm Woody Henderson, broker for American Dreams Real Estate, and this is the January 2023 San Diego housing market update. Let's jump right into the data. The median home price at the end of December was $749,000. That's down 0.1% from the prior month. Market time up slightly to 37 days. The number of new listings, 1,357. That is down dramatically, and looking back historically, that's the lowest number of new listings that we've ever had as far as the data goes back to 2004. The number of months supply is down slightly from the previous month to 1.3, and the number of sales was at 1,678. We've had cooling prices and persistent low supply here in San Diego. Let's take a closer look at the median home price. As this slide shows, in December of 2021, the median home price was $755,000. At the end of 2022, we were at $749,000. And I wanted to show you the peak in May of 2022 at $855,000. In June and July, we saw the Fed start to increase interest rates, and that resulted in lower prices or prices starting to come down from that peak that we experienced in May of 2022. And as I shared at the beginning, home prices have decreased in 6 of the past 7 months consecutively. Take a closer look at inventory. We're at 3,180 active listings. That is dramatically lower than what we've seen historically, and we have a low inventory situation that continues to persist. Let's take a look at what's happening with mortgage rates. As I shared with you last month, in 2022, we saw interest rates increase dramatically through the year as the Feds increased their interest rates. And then I also showed you last month that the mortgage interest rate is closely tied to the 10-year Treasury yield, and the gap between the 10-year Treasury yield and the mortgage interest rate is on average 1.78%. And what we've seen recently is that gap has been dramatically larger than that 1.78%, peaking at a little over 3.2% in June of last year, and now starting to come down. So that gap is getting smaller, however, still 1% above the historical 1.78 that we would see above the 10-year Treasury yield. So there may be more room for interest rates to continue to come down, even though the Feds continue to increase their interest rates to control inflation. Let's take a look at the 2023 San Diego housing market forecast. So on the national level, home price forecasts for 2023, we can see that several of the experts are forecasting increases prices, while others are forecasting decreasing prices. On average, when all of these are taken together, we can see that the forecast is for slightly positive price increases in 2023. So what's going to happen here in San Diego? What can we expect? Well, this slide shows the increases in prices on the left through 2022, and also shows that home values started to come down. However, although they've come down, they're beginning to come down at a lower rate. So the drop in pricing has slowed down, and we may see home prices start to recover as we enter the new year. I love this thought from Lawrence Yun, the chief economist at the National Association of Realtors. The monthly or the upcoming month should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. This slide shows the 30-year fixed rate, and I showed that they were going up and up and up. As of last week, mortgage interest rates were at 6.15%, and for those buyers that are eligible for FHA financing or VA financing, we're seeing interest rates in the low to mid 5%. And this is from Freddie Mac. As inflation continues to moderate, mortgage rates declined again this week. Rates are at their lowest since September of last year. So we may see more buyers coming into the market and demand increasing based on moderation of interest rates. What is the biggest opportunity right now? Well, here's what we're seeing in the field. I'm seeing more buyers coming into the market. New mortgage applications are up dramatically by 28%, and we're seeing multiple offer scenarios in our listings, but also when we're representing buyers in their purchases. So a closing thought for you from David Stevens, former Assistant Secretary of Housing, and I'm going to read this to you. So be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners should view this market right now as a unique buying opportunity. Well, thank you so much for allowing me to share this monthly market update with you. I'm Woody Henderson, broker for American Dreams Real Estate. My team and I are delighted to help you with all of your real estate related needs. Please never hesitate to reach out. We're here to be of service. Until next month.